On this episode, we talk about the NASDAQ going negative, Buffett buying America, and my new background. Welcome to episode number 9 of Think at Heart.
Let's go. I'm ready.
Okay, before we start, episode 9. You notice anything different about me?
Looking sharp in there.
Okay. Notice anything different?
I want to see what all the books say.
Well, this one in particular right here is my favorite.
Yeah.
Don't ask me what it is. I'm not sure. Yeah, we're bringing it up a notch here. Okay? We just, like everybody else, we're trying to get better every day.
That's it.
We had some feedback that we should work on our lighting. We should work on our background, specifically me in my 1984 basement. So bring it up a notch. Wore a tie for you today, Ben.
Yeah, it's looking good.
Since you're the big boss, I want to look good.
Sharp. I went microphone. Let's see how this works. How the sound.
Yeah, you
comes
got the
out
microphone.
today.
I went with the AirPod Pros. We'll see how that works. So,
sounds pretty good.
Just trying it.
Yeah.
I don't know about the lighting though. I think it washes me out. What do you think?
You need a tan.
I know. I'm gonna have to hit the tanning bed, like it's 1996 again.
Yeah.
Right.
Yeah.
I don't know if I do that though. I feel like I'm gonna have to get into shape. Maybe like mix in a salad and a sit up. You know what I mean?
Yeah. Exactly. Do they still have tanning beds out there?
I don't know. I feel like the UV rays they probably have like they have the spray tans now.
Okay.
They have the spray tans, so we'll have to get like a dual membership for that or something like that.
Yeah.
Team building. We'll go on a team building spray tan session every Friday afternoon.
I like it.
All right. Well, on a more serious note, it's been a bloody week.
Yep.
It's been a bloody week in the markets.
Yep.
So much so that people are crying that this is the end. Is this the end? Is this where it all tanks and everybody should sell now? Is that kind of where we're at?
Could be, but I don't think so. No, I mean, we've had pretty light volumes up until yesterday. So yesterday was really that first surprise where we saw volumes pick up into a choppy market, slightly down day. Today, then obviously we had more selling. NASDAQ's down, 1.3% year to date, but down pretty significantly off its highs. You had really Tesla and Apple kind of roll over into a bearish trend. Tesla's down almost 40% off its highs. So yeah, I think those are some individual stocks that have had some downward pressure, but my view is that this isn't the end. We're still in an upward trend. We're testing the bottom of this kind of current range and channel. Today we had Chairman Powell speak, so that's kind of what all the news was about. Probably saw him come out, and everyone's talking about he's scared about inflation, so bonds should go up and the market will go down because he's not going to do anything with interest rates. And so I think this is I don't think anything material has changed. I think this is what he does every time. He comes out and says the same thing until the market panics, and then he walks back any comments that are causing the market to panic, and we'll go again. So it was uncomfortable to buy today, but I continue to do that because I don't think anything's broken. I don't think anything's changed. And we've started to see kind of what his expectation is that he thinks we're going to have transitory inflation, which is kind of temporary. But on the other side of this, they don't think there'll be inflation in the back half of the year. Well, no kidding. I don't think anybody does. But how his words were interpreted today, the market kind of panicked.
Isn't it interesting how quickly the market panics though, right? Like, I mean, you've been doing this for 20 years. It seems like, we just came off a couple great weeks of highs, right? And, the market turns for a few days and everybody's panicking like it's going to be the end, right?
Yeah.
And it seems to be that's more of the trend now. Like, people only have an appetite for seeing things go up, right? Do you find that? Yeah.
Oh, yeah, for sure. I think that, even like some of the stocks that I've seen come off in the past couple of weeks is unbelievable. Like Tesla was overdone. Some of those names were overdone to the upside, but even good quality businesses are getting pounded for no reason. So yeah, people are panicky, and you know, everything kind of sold off together.
Yeah.
Yeah.
I wonder if it has anything to do with more of the trading culture now too. Like retail trading is way up, right? So, you know, I hate to put stigma on those people, but you know, that tends to be more of the culture of the trading technology or the trading trend, right? Where they want to kind of get in and get out right away.
Yeah.
So I think anytime there's a sell off, it's gonna be more dramatic, right?
Yeah, and because you still have the hedge funds front running all those traders.
Yeah.
So when you get acceleration to the downside and acceleration to the upside, and
Yeah.
so I think that's what you've got, right? You get all these Robin Hoods that continue to make all their money from selling their data feed to hedge funds. And so, you know, the hedge funds get on the short side when people are selling. So it makes the moves steeper. But I mean, yeah, there's always a risk that this continues, but you know, the data is going to be better than people think for the next couple of months anyways. So I think it's temporary.
Yeah. Well, I think that's a good lead into our first main point here is, you know, the NASDAQ goes negative for the year,
Yep.
right? What's your view on that?
Yeah, well, there's the chartists in the world kind of are getting a little panicky because it's broken a couple of technical levels. There's you know a lot of the kind of that momentum trade looks like it's starting to unwind, and people are getting scared. You got NASDAQ at kind of 12,700. If we get down to 12,300, that's kind of the long-term 200-day moving average, and so that kind of makes the chartist people a little bit panicky. So, you know, I think that it's a decent sell-off, you know, a couple thousand points. It's kind of a reality check. And so, you know, I've spoken with investors at all levels, obviously ones that I don't manage money for, but people ask me about some of the names that they own, that they've been making so much money on, and that they've just given back 30-40% in the past couple of weeks. I mean, it really is kind of that first reality check for those. You can buy anything and it's going to go up trade. That's not necessarily going to be the case anymore.
Those are my favorite ones, though.
Have you found any?
No.
No.
Still looking. I'm still hoping.
Yeah.
So let me ask you this. You know, since we do manage portfolios and you know, we're advisors. So you're an advisor. How do you manage risk in a down market?
Yeah, so you know it's a great point, and that point has evolved over the years. You know, 20 years ago, it was quite a bit easier to manage risk in this kind of market, where you could have your government bonds, you could have a kind of a government bond ladder that gives you decent protection when equities sell off. And that's before the central banks were really in controlling the bond market. So it was quite a bit easier then to do that. You had higher yields, so it offered you better protection in a sell-off. And so, you know, that's kind of gone now, particularly since the last kind of 3-4 years where rates are kind of pegged at zero. So it's a lot more challenging than it was, even more challenging than it was last year. So last year, as you know, volatility was really low, so you could buy puts and you could buy put options on the index to hedge your exposure and kind of dampen that volatility. But volatility is elevated now. So we got volatility at 30 right now, and it's kind of hovered between 25 and 40 over the last 12 months. So it makes that protection to buy pretty expensive. So, you know, in this environment, it's more challenging than at any point than I've seen, because assets are more bubbly than they've ever been. So the only asset class that was up, actually not the only, there were two asset classes that were up today, say energy and US dollar. But even then, it wasn't material. It was small. So, you know, how I've always done is try to have some cash in portfolios, and the way you manage risk is you use that cash to buy things when they sell off. So, you know, you only participate when things recover if you've taken advantage of lower prices. So if you just sit and do nothing, well, you know, if it eventually recovers, great. But unless you're buying on days when, you know, if you can get a stock down 10, 15% for no reason, you put yourself in a good position to kind of manage those returns and risk at the same time.
Gotcha.
Yeah.
Gotcha.
Yeah.
Yeah. I mean, that's probably got to be one of the more difficult things, right? Like everybody's happy when everything's going up, right? Like the clients have been thrilled with the results, you know, over the last 6 months or a year.
Yeah.
And, you know, but now is when you put in the work, right? Now is when you got to really grind it out.
Yeah, for sure. Yeah.
Yeah, for sure.
Well, now's the time. Certainly, like today was a day of gripping it a bit. You know, the Dow was down about 700 points at one point. You know, as I say, some stocks that I liked, you know, I found down 10-ish% in the middle of the day. And so, of course, your mind it thinks about, you know, what happens if this cracks? What happens if we do that? But you got to look at what the reality is. The market was pretty oversold today. Like the Russell 2000 and the S&P are as oversold as they've been since last June. So almost a year of kind of oversold. So you look at the signals and say, well, this doesn't seem like anything's breaking. So you have to use that cash that you have and take advantage of these lower prices, so that when it does bounce back, you're in a position of strength because you bought at lower levels.
Right. Exactly.
Yeah.
I mean, and again, we've talked about the psychology of what most people handle a time like this, right? They just see it and they just want to sell, right? And it's probably usually one of the worst things that you can do, right?
Absolutely, yeah. Especially in an upward trending market, right? You know, if we're in a cascading, something's broken, like you've seen high yield spreads blow out, like something different happened, maybe you want to take some off the table, if you haven't. But yeah, in an environment like now, that's the worst thing you can do, especially if you own good companies.
Okay, let's move on. Let's talk about the exciting world of yield curve control.
Gotta be your favorite.
I got this on the list. I was like, all right, man, get in the weeds. I'll go to sleep over here and wait for you done this one.
Listen, this is the one thing that I've been talking about now for a couple of weeks is yield curve control. And it's because I want to get it on record, because I think it's going to happen. And I want to say that it's coming. You know, I think probably a couple of weeks ago, I said this is going to happen at some point. And then last week we had the Australian central bank come out and say, we're going to do what's called yield curve control. And so yield curve control really is just the central bank explicitly saying we're going to control the yield curve. And so why this is important, why this is relevant, is because, you know, we've had yields rise and steepen. So as I think about the US market, you know, the US consumer really is what drives the US economy. And when you get a steeper yield curve, you get their costs going up. So you've had like mortgage rates in the US go up kind of 40 basis points since January, which is pretty huge. It's the highest level we've seen in a year. And so you look at that and and the Fed looks at that and you can see that that's going to put pressure on the consumer and slow the economy. So, you know, they've started to talk about going back to this Operation Twist, which is another lingo where they sell short-term bonds and buy longer-term bonds. And it's really to kind of flatten that yield curve down. And so, you know, if the US and the rest of the world is going to follow the script of Japan, which it looks like it probably will, Japan's come out and said, we're going to keep 10-year rates at zero. In fact, we're going to keep the whole yield curve at zero. So what that means is that rates will never move. It's pegged there. And so obviously they're in there buying it, keeping that rate depressed. And so, if the US does this right now, you got you got the US 10-year rate at 1.5%. Hypothetically, if they come in and say we're going to peg it at 1%, you're going to get about a 30%, 35% capital gain if you're to buy the 10 years right now. So it's pretty important that if they come out, they do this, either they actually start buying or they say they're going to start buying, that you see that yield curve flatten really hard, and there's a significant amount of money to be made there. And on top of that, you've seen the biggest short position that you've ever seen in history on that US 10-year. So you get kind of a cocktail, right? So if the central bank says we're going to do yield curve control and all the institutions are short the 10-year, you get GameStop on the 10-year.
Really, eh?
Yeah.
Wow.
Yeah.
Wow.
I know that's boring, but that's potentially pretty exciting.
Well, yeah, I mean, I kind of kid about it being boring, but I mean, it is boring. It's not exciting like talking about crypto, for example, which leads us into one of my favorite topics, just because it's interesting.
Yes.
Crypto. What are we seeing in crypto this week?
Yeah, so maybe tell me what you've seen or read. I definitely want to go through a few things. Anything that's drawn your attention in crypto that's you've been telling me about NFTs. Do you want to take a shot at that or no?
Don't want to go into NFTs just yet, and there's no way to trade them really for our kind of listeners. So we'll definitely do a segment on those. Those are non-fungible tokens. So, but we'll definitely get to that. I've been getting hammered on my crypto, but again, I'm not panicking at all. Like we've seen just as sharp uptakes as we have the downtakes, but I think I'm just being patient with it is all, right?
Yeah.
What are you seeing?
Yeah, so look, it's actually hung in pretty well today. Yesterday we saw Ethereum actually up on a down NASDAQ day. So it's kind of that first day where you saw reasonable support in the currency when, if it's a currency, maybe someone will call it a currency.
Oh, don't say that. Don't say that.
maybe that'll freak some people out. Potential currency.
You know what? It's good that you say that because it's going to piss a bunch of people off, but now you're on record. Right?
Yeah, exactly. Yeah. So it hung in there. Listen, I was, before we got on here, I was listening to Jeff Dorman talk. And so he's built a shop that deals kind of exclusively in crypto asset management. And it's all a team of these guys were serious traditional investment managers that decided that, there's something here that we need to provide to the market, either on an institutional level or a retail level, and they're starting to build an investment firm around it. And so it's pretty interesting to hear what he had to say, but really crypto is moving at explosive speed. We're kind of stuck in the middle here, eh, Scott? We got the bank, which is that old kind of that traditional, they're talking about Bitcoin now. They're excited about Bitcoin, but you got the actual Bitcoin world and the finance DeFi world 1,000 times ahead of this. So we're kind of in that middle where we're having these conversations around Bitcoin, but you're starting to say, well, okay, but that's yesterday. So what's happening today and what's happening ahead? Yeah. So I had clients talk to me about Bitcoin. Somebody just saying, it doesn't earn anything. You can't generate any yield on it. It's like gold. Well, it's not actually like that. As you know, there's a lot of places where you can keep your Bitcoin and you can earn 3, 4, 5, 6% and essentially risk-free returns, where you lend out your coin, they pay interest, and whatever currency you'd like, and they give it back to you when you want. So, there's yield generating tools that are happening around Bitcoin right now. We had, we talked a little bit offline there about these kind of tokens as well. You saw the NBA player kind of tokenize his salary, and you're seeing kind of the speed at which this is moving is so fast. But I am definitely interested in these kind of yield generating Bitcoin funds, because if you could tuck away cash instead of earning 0.5% and earn 3-4%, the same kind of risk-free type returns, I mean, that's a huge win for clients. So that's coming along. I don't know when it's going to be available, but certainly that's coming along, and that's one of the things I'm probably most interested in that space right now.
Yeah, I mean, do you think people still have a reason to be cautious about it? I mean, we talk to a lot of our clients, right? And because we work for a bank, right? Even the bank itself is always super cautious about it. Like I remember only just less than 6 months ago, you having to fight to buy it for your clients, right? At an institutional level. So, do you think there's a reason that clients should still be cautious about it?
Yeah, I mean, I still think that risk is the banning. You could have the central banks come out and ban it. If they decided to come together and do that, I mean, it's possible. It's not probable.
Yeah, but aren't we past that? Aren't we already past that? I think it's too, the institutional money is already too far into it to let that happen now, right? These big hedge funds are buying it by the billions.
Yeah.
Like massive companies like Tesla. Tesla said they're actually going to accept it as a currency, right, to buy their products.
Yeah.
Right. Like, are we not past that point where governments could even ban it? Really?
I don't think ever. I don't think we ever get past that. I mean, in the U.S. they banned gold for a use of purchasing power, and you basically confiscated all the gold in the U.S.
Yeah.
So, I think that it's less and less each day as these institutions come out here. It's a binary risk, because one day if they do it just hits the whole thing. It's extremely unlikely.
Yeah, and you know what? In an age where the masses are looking to start a revolution for every little turn, right? Can you just imagine if they tried to ban crypto?
Yeah.
There would just be such an uprising, that would probably even push it that much further, right?
Yeah.
And just divide. It would just be even more of a divide about it. So.
Yeah, I think so. I mean, I think they're more likely. Yellen spoke, Janet Yellen, who's Secretary Treasurer in the U.S., spoke about potentially taxing it more. Obviously, you have to pay tax on it, but that she talked about taxing a crypto tax on unrealized gains.
Yeah.
So that's crazy, right?
Yeah.
Like they'll tax you because it's gone up. Like even if you haven't sold it, they're going to tax you on whatever that unrealized gain is at the end of the year, potentially. So
the thing is, I think the exciting part too is everything, like, it's great. Blockchain is kind of the main part of it, right? Is the more exciting part than the crypto and the Bitcoin. Like, all that's great, and whether it becomes a currency or not is one thing, but all the other technologies that can stem from this, right? Is really the opportunity. It's not just, and this is really what you and I are going to try over the next several months to help to really boil it down and simplify it. Not that we're trying to do that here today, but we're really just going to try to make people understand, because I think if somebody can really communicate it, I don't think anybody's very few people that have been able to communicate it real well. Like we just had a special guest on last week. He did a great job with it. Still people confused.
Yeah.
On what it is, right.
Yeah. Yeah.
So I think when people, it becomes part of, it's when when the internet first came out, or I remember I was working retail when the interactive card came out.
Yeah.
Well, holy cow, people would I would have people come into the store that, would lecture me every time that I would ask them if they wanted to pay with Interact. They're like, they're going to steal my money. And, same thing that we're getting with our clients saying that, it's for terrorism and money laundering. Like, you can do that, but you do that with regular currency as well.
Yeah.
Right. So, I think it becomes part of the everyday culture. I think there's a lot of super exciting things that can become of it.
Yeah, I think you're right. I mean, I think that that's the unique challenge we have to present it that way. And I think if we can really get it to there, and I think that, we're still learning the kind of the structure and the ins and outs and where how you could point to where it's going to have the most impact. I think it has impact everywhere, but I think finance, it probably has the most impact.
Yeah.
And now how can we simplify that so that people can understand it? And I think that's our big challenge right now.
Yeah. I think just maybe on the last point, and then we should move on. We always talk too long about crypto, but it's hard not to. It's to me, it's kind of like when the internet first started.
Yep.
Right. Yep. Where it just changed the world. Right. Yep. I mean, imagine that you can, from an investment side, imagine that you could actually invest in the internet when it started. And there was multiple ways to do that, as there is with blockchain and crypto, right? There's multiple ways to invest in this. But imagine you would know then what you know now about the internet and all the different companies and figures that came off it.
Yeah.
You wouldn't have to know exactly what was going to hit, but you certainly would have taken advantage of the opportunity. And I think that's how we're looking at this now, is kind of like, this is one of those, momentum changing things in the world for sure.
Yeah.
Yeah.
I would agree with that. So I think we'll have to continue to talk about each week, because
I know. I know. We more and more every week sound like the crypto guys.
Yeah.
And I feel like I'm always like, hey, we're not the crypto guys. Like it's only a small piece, but it's probably,
it is.
We're excited about it because it's new.
Yeah.
Right.
Yeah.
And it's in the news and everybody's talking about it. Nobody knows what it is. So everybody's asking about it.
Sure.
So we have to address it.
We do. And before we leave that point, I mean, there's lots of existing companies that are already there too, right? You got Visa, you got PayPal, you got MasterCard, you got Square, you got IBM owns more blockchain patents than any company in the world. So this is happening with big companies too behind the scenes. Yeah,
exactly.
Yeah,
that's why again, the chances of it just disappearing one day because they're going to ban it, or I just really think we're over that hump. I really do.
Yeah.
Right. So, okay, let's move on. What do we got? In the news, Warren Buffett's annual letter to his investors, or to his shareholders, I should say.
Yeah.
Normally I read it. Normally I did read it specifically for this show. And, my feeling on it is that it's becoming, I don't think it's as meaningful as it once was outside of Berkshire shareholders, right? Like, it used to be a big event, kind of like when Steve Jobs would talk, kind of on that same level.
Yeah.
Now I think people just don't care as much, unless you're a shareholder of Berkshire Hathaway. They're not doing that well. I mean, if you look at, I think their main holding is Apple, right? They own 5.5% of Apple, and that's where most of their results are coming from what I could see on there. You tell me if you notice something different. But I mean, I think these guys are just, good on them. I have no ill will towards them. They had their day, and have a lot of respect, but I just don't think they're relevant anymore.
Yeah, I think it's really kind of much different feel because I've read a lot of these. I read this one too as well, and it was very nostalgic as you read it, almost like
Yeah,
they're saying their goodbyes.
yeah,
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 yeah, yeah. So they talked about their big companies. With your point, Apple, Coca-Cola, Berkshire Energy, and the railroad. Those are kind of their four big holdings. Yeah, they were up 2% last year. Obviously, underperformed the market again. So, yeah, like I mean, even as a Berkshire shareholder, I'd look at it and say, okay, well, maybe I'm missing something. Well, I appreciate that you did all this great stuff back here, but what's the great stuff that's in front of us?
yeah,
Like, and so
yeah.
I didn't get that vibe. Obviously, they're gonna do a streaming event again in May this year, which they'll talk a bit more. But it's probably the least enthused I've been out of reading any of his stuff. And he's been a phenomenal investor, and he's been the
Yeah.
best in the world. But I think he's definitely on a different plane right now.
Hey, you know what? I was at Wayne Gretzky's last game in Ottawa, and kind of has that same feel.
Yeah, yeah,
You know,
yeah,
like again, all due respect, but
yeah,
I mean, Charlie Munger's 97, I think
yeah,
97, 98,
yeah.
right? Like, hey man, you had a good run. It was
Yep,
awesome,
yeah,
right?
yeah,
But it's time to move on,
yeah, yeah.
right?
I would say, yeah, I would say. I think that if I were a shareholder, a big shareholder, anyways, that'd be something I'd be saying is, at least I know his two other investment partners are always there with him, but at least give them the chance to have some face time. At least say like these are the guys that are taking over,
Yeah,
so that you can kind of pass the torch, even if you want to continue to make all the decisions. But I think that the stock's going to get hit when one of them dies, which is probably soon.
yeah,
Yeah,
yeah. It's too bad.
yeah,
The end. We know what's funny about that is that it seems like it was just a few years ago when he was still, even though he was older, he was still the hottest thing. Berkshire was super hot,
yeah.
right? They were making huge plays, and then it's how quickly it can turn, right? But
Yeah, they
yeah,
came in and bailed out Home Capital in
yeah,
Canada. Yeah,
yeah,
they were still really active in the deals. And now there's been like they haven't done, with their pile of cash that they haven't done anything. Like they haven't
yeah,
participated in any kind of deals that I think they would have had a chance at. So yeah, I think they've decided to take that. Let's just cruise.
yeah,
Yeah,
yeah. Again, I don't blame him. I
no,
don't blame him.
no.
Okay, let's wrap it up with the. We should have maybe left that one for the end, but let's end on a mortgage insurance. Sorry, mortgage insurance versus term insurance. Man, you can tell it's getting late.
It is the late night for us here.
It is a late night for us. We're doing
Yeah,
this late into the night.
yeah.
Um, so yeah, why don't you get us started on that?
So wrap up. We'll do a quick one on this, but I think that it's still pretty misunderstood, right? So people go into the bank and they go get their first mortgage. They walk into the bank and you're signing off on that first mortgage, and right before you sign off on that, the banker typically says, "Okay, well, you should probably get mortgage insurance in case something happens to you. We're going to pay for the mortgage out, and then you'll move on." And so, of course, 9 times out of 10, you just initial that and move on. You don't really understand the ramifications of that,
Yeah,
right?
exactly. Yeah,
And so
I've fallen for that one many a time.
yeah, exactly. It's easy, it's simple, right? They take care of it. But what happens when you put that in place, say you have a $500,000 mortgage, you pay the premium based on that 500,000, but every month as you pay down your mortgage, your premiums don't change. So your life insurance is a little bit less every month, but your premiums, you're paying the same every month. when you started the policy. What happens with versus the alternative, which if you went for an individual policy, you would lock something in place. You would buy, say, $500,000 coverage for 10 years, you pay a fixed amount for 10 years, but your premium wouldn't change. And the difference between kind of how they're put in place is, the one at the bank's put in place with a quick initial, and they don't do any underwriting, so that's easier for people, versus the alternative, which is they do their underwriting up front. So if there's anything, they find out up front, and you're guaranteed to get that insurance if something were to happen to you, versus the traditional finance, where if something were to happen to you, the bank could come back and they could say, well, you have a pre-existing condition you didn't tell us about. We're looking back and saying that, you should have told us you had diabetes, and since you didn't tell us that, we're not going to actually pay out the policy.
Interesting.
Yeah.
What's funny is that when you go to the bank and you get a mortgage, they make it sound like you have to take it a lot of times. Do you not have to take that mortgage?
No.
Sorry, that mortgage insurance?
No.
Interesting.
Yeah.
Yeah, because I think a lot of them position it that way, right? That you have to take it.
Yeah.
Interesting.
Yeah.
Great. What else about insurance that's exciting? Oh, nothing. Nothing's exciting about insurance.
We can save that for another one.
But why are we talking about insurance on, an investing podcast?
Yeah, well, insurance makes up a component to your investment strategy. It makes
What?
a component to your goals and targets.
I had no idea.
Yeah.
Wow.
Yeah.
Do advisors sell insurance?
We're broker as well, so we're insurance licensed, so we can deal with any of the big insurance companies, and we do.
Wow, that was a shameful plug for the Hart Investment Group, National Bank Financial. If you need insurance for all your insurance needs, we're happy to help you.
Well, I think we should probably wrap up with just what's ahead, I guess. Should we talk about that, or should we just shut it down here?
No, I'm just getting started, man. We're not even halfway through. Let's keep it going. There's a lot of exciting stuff happening in the world of finance.
Yeah, there is.
Yeah. All right.
Speaking of that, what did you learn in finance this week?
Nothing.
Nothing?
No.
Well, I think we got an exciting one next week too. We got an option specialist coming in. They manage an option portfolio, which is going to be pretty cool to have somebody talk about that. Try not to get too deep in the weeds, but trying to explain options. As you've known, I've run kind of that put options to kind of manage risk in portfolios, and I've had hundreds of conversations around how they work and why they work, and so we're gonna get someone in to really break it down.
You said you're not going to get too into the weeds, but options are the weeds. It's impossible. Like, nobody understands what you're talking about, like puts and calls, right?
Yeah.
Like, nobody understands what that is. Right?
Yeah.
I mean, your average person.
Yeah.
It takes, but you're going to get into it. You're going to simplify it.
We're going to try.
Am I going to be on that one? Maybe.
Yeah, of course.
We'll see. I don't know if I'd have anything to contribute, but we'll see. I could contribute some jokes, maybe.
Well, look, I mean, we're trying to educate. We're trying to help people understand how the different structures work within finance, and try to do our best to demystify that. Right? It's not. It's definitely not rocket science. So it's a matter of just understanding how the different nuances work, and hopefully we can help educate some people.
I'm gonna be like, wait, you mean you can actually borrow the shares from somebody else when they're not using them? Like, how does that even work? Makes no sense whatsoever.
Yes.
It really doesn't.
Yes.
But it's a thing, apparently.
Well, yeah. So we'll start there. We'll try to simplify it.
Okay, well, let's wrap up. I got to be honest, I've had a hard time paying attention this whole time because I've just been staring at myself and my beautiful background here. It's wow. It's amazing.
I like what
I know.
you've done with the place.
Yeah, if you don't get anything out of this and you're watching the YouTube version of this and not the audio podcast, I would say that's probably the most value that we brought people. It's just this new background and my suit and tie.
That's true.
That's great.
That's true. Well, we got big red screen here, so hopefully it's green tomorrow. And it's gonna be good.
And if it's not green tomorrow, it's okay.
We're gonna buy some more.
We're gonna buy some more. It'll be a buy day. It's fun to buy.
Yes, it is.
Right? And watch it go up.
Yes.
All right, that's it for episode 9. Think at Heart. We'll see you next week.
Awesome. Thanks.